How's it going on, everyone? In today's video, we're going to break down daily bias and what traders mean when they talk about a draw on liquidity. I'll explain the idea first in simple terms, and then we'll jump straight into the charts and walk through real examples so you can see it in action. One of the cleanest ways to establish daily bias is by using something very simple. The previous day's high and the previous day's low. Now, these two levels act like magnets for price. On most trading days, price is not random. It's usually working its way towards one of these two levels, and sometimes even both. Instead of asking if price will move, I focus on where price is most likely trying to go. And more often than not, that target is either the prior day high or the prior day's low. For example, if the market is trending higher, my expectation in price is being pulled towards the previous day's high. That level becomes my draw on liquidity. And on the flip side, if price is trending lower, then that previous day's low becomes the more likely objective. Now, these levels aren't just targets, they can also act as liquidity pools that helps frame reversals. Let's say price trades into that previous day's high, but fails to push through it with strong displacement. Instead of continuing higher, price rejects the level and rotates back into that range. That previous day's high just acted as liquidity for a reversal. The same logic also applies on the downside. If price sweeps below the previous day's low but cannot hold below it and instead snaps back into the range, that failure to displace lower can signal a reversal of that liquidity. Here's how I chain this together day by day.
Okay, so if price comes towards this previous day high and it wicks above it and closes beneath it, we can be expecting a reversal. Now, where we can anticipate for price to go next will be this previous day's low. And what does price do? Price close fully beneath this previous day low. Now, that tells us, or that gives us an indication where price might be heading next. Price might be heading to continue downwards to go to this previous day low. And what does price do? Price continues downwards to this previous day low, but it doesn't close below it. It wicks above it and closes above it, indicating that price may be heading upwards after that. So, what does price do? Price then closes above this previous day high. And then once again, it closes above this previous day high again. And that's how it goes.
This process continues until price fully satisfies its draw on liquidity. Rather than guessing direction, I'm simply following where liquidity is most likely sitting and letting price show its hand. With framework in mind, let's jump onto the charts and walk through several examples so you can see exactly how this plays out in real time.
Okay, here we are on the charts now, and we're looking at the gold pair, specifically on the daily time frame. And let's go ahead and see how price plays out and what price is opting to do next. We have a prior day high here, and we have a prior day low. Now let's see which direction price goes into. As you see, price takes out this prior day high. And what does that tell us? That we're intending to go to this prior day high next. And what does price do? Price wicks into this prior day high and it closes below. Now, where are we looking for price to go next? Looking for price to go right to this prior day low and either close below it or close above it. And what does price do? Price wicks into this prior day low and then it closes above it, giving us a confirmation that price is likely to head up next to this prior day high. Now let's see what price does after that. And what does price do? Price wicks into this prior day high, but closes below the prior day high. And that gives us a signal that price is going to the prior day low. And what does price do? Price closes below this prior day low, giving us a signal that price is likely to head down lower. And then price comes to this prior day low. It wicks into it, but it doesn't wick below it. So it wicks into this, and then it goes to the prior day high as well. So price comes into the prior day low and the prior day high. wicking into both, and it doesn't close below or above both. So let's go ahead and see what price does next. And price closes above the prior day high. Now we're intending for price to come to this prior day high. And what does price do? Price closes above this prior day high. And it goes on and on and on. So once you get the idea of how it is, you can understand it all. Another level I consistently pay attention to is the previous week's high and low. I start by defining last week's range and marking both the high and the low on the chart. These levels give strong higher time frame context and often influence how price behaves during the current week. The prior week high and lows can be used in two ways. First, they can help frame a reversal if price trades into one of these levels and fails to hold beyond it. That rejection can signal a rotation back towards the opposite side of the range. Second, they can also act as a clear draw on liquidity. In some cases, price will return into premium or discount, react from a key area like an order block, and then move with intent towards the opposite side of the previous week's range. In that scenario, the prior week's high or low becomes the target. With that in mind, let's jump into the charts and look at a few examples. Okay, so here we are on the daily time frame, and as you can see, we've marked out the weekly prior high and the weekly prior low. And let's see how price plays out going on to this next week. And as you see, price comes within this weekly prior high and it wicks above it and then closes beneath. So now, where will we anticipate for price to head next? The next area or the next target for price will be this weekly prior low. And let's go ahead and see how price plays out. And what do we have? Price comes within this weekly prior low and then it wicks above it. Price comes from the weekly prior high, wicks here, and then it goes all the way down to the weekly prior low.
In the next part of the video, I want to cover swing points, how I use failure to displace, and how that naturally ties into the next day model. If you're not familiar with swing points as of yet, I've already covered them in detail in a separate liquidity video, and I'll have that link for you in the top right and in the description. Swing points are useful because they help me identify where liquidity is likely sitting. When price is trending higher, I ask a simple question: where is price most likely trying to go next? In many cases, it's an older high that hasn't been taken out yet, and that high becomes a logical draw on liquidity. At the same time, those swing points can be used to frame reversals. If price trades into a liquidity pool resting above a prior high and then shows weakness, that level can mark a turning point rather than a continuation. That brings us into the idea of displacement, or more importantly, the lack of displacement at swing points. For example, if price forms a swing low and then fails push and hold below it, that inability to displace lower tells me that downside liquidity has not been accepted. And in that case, my directional bias then can be up or to target a next high. The opposite is also true. If price trades into a swing high but cannot hold above it and instead closes back inside of the range, that failure gives me a bearish bias. Once that bias is established, I can apply the next day model using prior day areas, old highs, or old lows. I look at how price closes relative to those levels. If price fails to displace below a key low, then going into the next session, my expectation is for higher prices. In that scenario, I'm anticipating a bullish daily candle. On the other side, if price runs a swing high, closes back inside of the range, and shows rejection, I can anticipate a bearish next day. When you start stacking these observations together, the structure becomes very clear. We see liquidity taken, price falls to hold beyond it, bias forms, and that bias carries forward until the next draw on liquidity is reached. In this case, that draw is sell side liquidity resting below that swing low. Until that objective is met, I continue trading in alignment with that directional expectation. Now, let's jump into the charts and walk through a few more examples so you can see this play out step by step.
Okay, so here we are on the daily time frame on the pair euro versus the US dollar. Let's go ahead and see how price plays out day to day, taking out previous day highs and previous day lows and combining that with PD arrays or imbalances. So, first thing I see is that we have a clear fair value gap here. Doesn't look tapped into. So we have our previous day high here and we have our previous day low here. And the next candle doesn't take either side. So we have no clear bias as to where price is heading now. So we're going to mark out our previous day low and our previous day high here. And let's see where price heads from there. And price immediately takes out this previous day low, closing all the way beneath it. And now our bias is down. So let's mark out this previous day low here because we're looking for price to take out this previous day low. And what does price do? Price sweeps up and takes previous day high too. Price wicks above this previous day high and closes beneath it. And then it closes fully beneath the previous day low, intending that price is about to head lower. And then since we're inside of the fair value gap, I have either two options for price. Either for price to take out this previous day low and then head up, or price just heads up. What does price do? Price takes out this previous day low, wicks beneath it, grabbing liquidity, and then closes above it. So now we're looking for price to take out this previous day high. And what does price do? Price ultimately takes out this previous day high, and then we have our previous day high here. And we're looking for price to take out this previous day high. And what does price do? Price stalls. Price doesn't take out neither previous day high or neither previous day low. So let's mark out the previous day high and the previous day low. And let's see what price does now. What does price do? Price fully closes below this previous day low. And now that gives us a signal that price is heading lower. Now price stalls. So now we have no bias again. So now let's mark out this previous day low and previous day high. Price takes out this previous day high, takes out the swing high, and takes out this swing high. So, and then it ultimately closed below this previous day high. So now we're looking for price to head lower. We're looking for price to head to take out this. We're looking for price to head to take out this swing low, and then this previous day low. Let's go ahead and see how price plays out. What does price do? Price closes below this previous day low. Now we're looking for price to close below this previous day low as well. And price closes below this previous day low too. But as it closed below this previous day low, it takes out both swing lows here. Now, let's see what price does after here. Price stalls. So now, what does price do now? We draw our previous day high and our previous day low. And let's see what price does. Price takes out previous day low and it closes fully below the previous day low. So now we're looking for price to head lower. What does price do? Price wicks below previous day low and then it closes above. And then price goes on and on. The same cycle goes on and on and on. So now we're going to take a look and pair this with a strategy. Okay, so here we are on the pair Euro USD and we're looking at the daily time frame right now. And the first thing I notice on the daily time frame is that we have a clear fair value gap. So we want to hurry up and mark that to get that out of the way. Now, since we marked our clear fair value gap, We also want to highlight that price is in a clear downtrend as well. And you also want to highlight our previous day's high and our previous day's low. Now let's go to the next daily candle. And what does price do? Price goes within that fair value gap, wicks within it, and closes below it. And in doing so, it goes within the previous day high, wicks above it, and closes below it. So now our bias towards the next day is going to be that we're going to head lower. We're going to target this. Our main target will be this swing low and this previous day low. So let's highlight both of those. And now let's scale down to the 1 hour time frame to find our levels of liquidities or our imbalances that we can enter a trade on. And the first level or the first level of liquidity I see is this 1 hour buy side liquidity. So let's go ahead and mark that out. And let's see how price plays out from there. Okay, so price comes within this 1 hour buy side liquidity, wicks, sweep liquidity, and then closes below, giving us a clear bearish rejectional candle. So now we can scale down to the 15-minute time frame and find our entry. We can enter upon a bearish candle or a bearish imbalance, bearish fair value gap, bearish order block. Let's go ahead and enter upon any entry confirmation that you feel suits you. So me, I would enter on this bearish candle and I would target this level of liquidity down here, this daily level of liquidity. Now, let's go ahead and see how price plays out. So price immediately takes out this previous day low. Now let's see what price does beyond that. And then immediately price goes straight down, taking out this previous or this swing low. And as you see, gone over what it is, swing highs, swing lows, ICT daily bias, displacements, gone over it all, and we've gained and formed a strategy around it. All right, that's going to wrap up today's video. If you take one thing away from this, it's that price isn't moving randomly. It's constantly working towards liquidity. If this breakdown helped you, make sure to drop a like and subscribe to the channel. It really helps push this content out to more traders who are trying to improve. And if you have any questions or want me to break down a specific concept in a future video, leave a comment below and I'll take a look. Thanks for watching, and I'll catch you in the next one.